India lost the top spot of the emerging markets ranking and slipped to second place below China. After topping the list for 4 months, China dethroned India in August due to India's weak stock market and currency performance. An emerging market is the economy of a developing nation which is marked by rapid growth in GDP, trade, and FDI, that is, foreign direct investment. After months at the top of the tracker, India slipped to second place in August, and one of the main reasons was a shock from Washington: the steep US tariffs that came into effect late in August. The tariffs weren't abstract. The White House moved to impose extra duties, in some cases rising to 50% after a row over India's oil purchases from Russia. That spooked investors and markets reacted fast. Exports to the US dropped sharply as the tariff bite began to show. That alone changed corporate earnings expectations. And when export revenues wobble, foreign investors get nervous. August saw heavy sell-offs in Indian equities. The benchmarks logged their worst weeks. That wave of outflows added pressure on the stock market. At the same time, the rupee took a hit. Currency traders reacted to the uncertainty, and the rupee slid as part of a broader decline that extended through August and September as trade tensions continued. Now India's economy still has strong pillars. The Mint tracker shows India with a very healthy 7.8% GDP growth for April to June, a manufacturing PMI in the high 50s, and export growth. Those things kept India competitive across most indicators. China was just able to edge past India mainly thanks to stable stock market performance and steady GDP growth. However, its climb is owed more to India's deteriorating performance than their own improvements. China remains one of the only two emerging market economies facing deflation, which means low demand. So yes, India has slipped to second because of China's steadier markets, but the immediate trigger for the rupee and market wobble was the tariff shock from the US. Emerging market economies often present opportunities for higher investments because of rapid growth. However, they also carry greater risk than the developed countries, such as political instability or volatile currency. So the fix is partly diplomatic and partly economic. Calm the trade fight and the rupee and markets may stabilize faster than anyone expects.
In a world where business never stops, Mint keeps you ahead, any screen, anytime, from studios to the ground.
Mint is doing brilliantly well. It's a well-read page, I would think.
Mint breaks down business, leadership, and lifestyle, boldly, visually, and smartly. From boardrooms to markets, from personal wealth to industry trends, we bring you the insights that matter. What fuels India's biggest CEOs? Ride along and find out. Want to invest like the pros? Learn from India's top market experts. Your money, your future. We make finance simple. Step inside breathtaking homes and the creative minds behind them. India's real estate scene decoded. No jargon, no fluff. Some chase success, others create it. Meet the ones who made the impossible possible. We don't just talk business, we show it, and the world's watching.